Good morning, guys. Welcome to ShareTreck. This is Raj here, friends. We'll have a look at the markets today. I published a few videos during the weekend. If you've not seen them, just please check them out, where I was talking about a short-term change of sentiment for myself from bearish to bullish, and I had given the reasons why. And today we're going to examine what the market looks like with the pre-market action already in place, and look at a few stocks. I think I'm going to focus on NVIDIA. I'm going to also talk about a new quantum computing stock called Rigetti, in which I have put a small amount of money as a speculative bet. And later today, I'll be revealing our portfolio for 2025, a new portfolio. It already has positions and it has got a lot of cash. So the cash is what we are planning to invest during the rest of the year. We'll take our time and do it step by step when I feel extremely confident about any stock. And I'll also look forward to engagement from you guys. Please let me know what you're buying and what you're selling. You're doing shorting, I need to know. Please put that in the comment section, and it's always helpful. That said, let's get started. Welcome back, friends. We are looking at a chart for the Nasdaq futures, and as you can see, we are testing some critical levels out here. So all the bullishness that I thought about, they need to materialize today, and for that to happen, we have to first of all break through this diagonal line of support out here. And once we do that, we are going to be having a minor challenge at this level, which happens to be around 22,079.75, so something in that region. So once we break this chain of lower highs, I think we can assume that we have broken the bear channel. Of course, anything can change later on, but that will be the first positive sign that we are looking for. Right now, we are still on an overall bullish trend because there are more higher highs and higher lows. So I think that we have to watch this week. It's going to be crucial. And there are a lot of things happening this week that we should keep our eye on, because those are the things that are going to change the trajectory, if it will. Some of those things are the ISM and JOLTS data. That is going to come up shortly. I think on Friday you have the non-farms payroll and unemployment data. So those things are also going to be quite important. They are all catalysts. They could be bullish or bearish. And as I mentioned much earlier, if there's a revision of employment data by BLS, and it doesn't look good, then I think it could be a trend changer. So that's what we have to watch out for. And I think that overall, if we look at the market right now, we are still not in bear territory, but we are in a transition point where that could happen. And I hope and pray that the bullish signs that I saw during the weekend continue to strengthen, so that we can assume everything is going to go well. Many analysts are hedging their bets, saying that the first half would be maybe a correction, and the second half is going to be where we'll rake up gains of around 15% for 2025. So that's what many people are saying. And there are pockets which are seeing excessive activity, like quantum computing and nuclear. Those are the areas where the excitement is. It reminds me quite a bit about the genomics excitement after CRISPR was discovered, and then there was a lot of genomic companies coming up. So we had a lot of excitement out there. I see the same thing out here with regard to nuclear companies and quantum computing companies. So that said, let's go and take a look at the indices. Dow Jones. So Dow Jones is up pre-market 0.80%, and we had a reverse head and shoulder which did not materialize, so we are going upwards. And again, we are going to look at certain levels to be breached. So this was the last high. So as long as we are able to climb above this, we can say that we are no longer in a bearish trajectory. So this is the resistance that we have to break, and it happens to be at 43,294. And looking at the MACD repairing itself and momentum picking up, I think that we have some prospects of that happening. And again, this is another line of resistance that we have to break before we reach there. So that's what I have for you there. And QQQ is up 1.02% in pre-market activity. Right now it's 812 as I'm recording this. I have marked two levels that we need to cross in QQQ in order for us to be able to reverse this trend of lower highs and lower lows. So we want to convert this bear channel into something neutral or bullish. And for that, I think we first need to break the level of 529.97, which is this red line. And then we have to break the level of 538.63. So as soon as we break 529.65, I would be looking at this as a double bottom, and will have its own target that will become a bullish sign. We are still above the 200-day exponential moving average, so I think the story of bullishness is still intact. But today and this week will be very important. We also should remember that this month is going to be short. I think on the 20th you have inauguration of President Trump. That's going to be a holiday. I think January 9th is the official morning of Jimmy Carter, so the markets will be closed. So 2 days are already gone. So I think that's another factor we have to keep in mind, which means that a lot of trades will be concentrated on the working days. So it's another aspect to keep in mind. S&P 500, similar story. We have to break this trend line first, and then we have to break above 6,042 so that we can start breaking this cycle of lower highs. We don't have lower lows. I mean, the lows have plateaued out here. They got a support at 5,841.29. So that's the good news. And MACD is on the mend. Momentum is raising sharply. Pre-market, we are up 1.26%. All is looking good. VIX is up moderately 1.80%, but it's still within the range. And let us go and have a look at some of the stocks that I'm very enthusiastic about. I would like to take us to NVIDIA. So in NVIDIA, we have a reverse head and shoulders, and I have given a target of 152.90. Pre-market, we are up 2.57. So we are already up here. So we are halfway to our target, more than halfway to our target. And we are well within the bullish channel. So things are looking pretty good. And we will potentially test the all-time high, and we may cross 150. So we have to watch out for that. MACD is bullish, momentum is great. A good time, I think, to enter into NVIDIA for a short-term profit taking. Of course, these are my personal opinion and not financial advice, so you be careful. If you make a wrong bet, your spouse is going to give you a kick in the ass. So be careful, and don't give into temptation or FOMO, right? So do your own analysis before investing. Next, I think the other one I would like to talk about is Google. I think Google is one of the cheapest Magnificent 7 stocks out there with a tremendous amount of potential. And I think even at this stage, Google seems like a good purchase for dollar cost averaging. We are seeing a bearish MACD and momentum that is picking up, so that should improve the MACD. And we have a bull channel which is going all the way up here. We already met our cup and handle target. We already met our cup and handle target of 190.75. Now we are doing a bunch of consolidation. If it wasn't for this gap up out here, I would be even more confident. But now what I want to see is I want to see another higher low. We are forming a pennant out here, and I want to see us break out above it. Let me draw the pennant for you. Just so that you can visualize what I am seeing here. So this is what I am seeing. So this is the pennant that I'm talking about. And if we manage to break out of it, then it will be on the upside, because that's what happens with bullish pennants most of the times. Then we are going to be in the all clear. If that doesn't happen, and if we break down on the lower side, we have this long running support line which is available to give us support. So I'm hoping for the best here with Google. I'm very bullish on Google in the long term. Short-term fluctuations could happen. So that was the second stock that I want to talk to you about. Another stock where I want to share my opinion with you guys, and I want you guys to let me know in the comment section, because I've been wrong about Tesla before. Not only me, many people have been wrong about Tesla. Tesla is more of a meme stock right now. I'm thinking that as Elon Musk's stock with Trump raised, the share also went up. And then they started having these spats. There's the H1B spats, and then Elon Musk calling Trump supporters all kinds of names. All those things have happened, and we have seen a series of drops out here. And I think that Trump and Elon Musk, I don't think they can get along very well in the long term, because both have big egos and both think that they are too smart for everybody else. So I'm thinking that we are seeing the start of a bear channel out here, and I could be wrong, but we have had a lot of red candles. Earlier it was all green candles because there was a lot of enthusiasm coming up. Now it's all petering out. I think this is just a little bit of short squeeze or something that might be happening, but I'm thinking that it might probably come down further. So the way I'll be watching Tesla in the next 2 or 3 weeks is whether it forms any lower highs and lower lows. If that happens, then I think we are definitely in a bear channel. However, if we were to break through above 418.47 and convert that into a support, then I would sit up and watch, because I want it to break through this line of resistance out here, which I think will be the next test. And if it does that, then I think it's definitely on a bull channel. So with that said, if you look at the pre-market action, it's up 2.51%. It's crossed this line of resistance and it's gone to 420.83. I wouldn't buy it right now, but I'll definitely watch it. The next stock I want to talk about is Netflix. I think Netflix has had a trend reversal. It has reached the top and it's coming back down again. MACD is absolutely bearish. Momentum is dropping. So I think Netflix is going to come down, and there are some levels of support that I can mark out here, some around 770, and I think there is another support somewhere out here, which would be around 868. So those are the two supports that I can draw right now. And we'll see where Netflix goes, because it could be an opportunity to buy it again, assuming that the second half of the year is going to be an uptrend, because it's a pretty good stock in my opinion. Next, let's talk about Accenture. Accenture is a stock which could benefit from the AI rush. And we have a cup and handle target for Accenture, which takes it to 448. And there's a whole lot of consolidation out here. MACD is in the mend and the momentum is picking up. I hope this consolidation breaks out on the upside. If it does, then I think our cup and handle target of around 448 will become viable. I'm hopeful of it. And the other company I want to talk about is Rigetti. I put around 200 shares on the Canadian side, 200 shares on the US side on Rigetti. And it's a purely speculative play right now. Rigetti is into quantum computing. There's a momentum that is going along with Rigetti, and it's overbought. So I might have bought it a bit too early or too late. We'll have to see. I bought it around 18.75 or something like that. And right now it's at 18.76. It went up all the way to 19.02. Pre-market it is down 1.42. It's going to be a swing trade position, and I'm going to get out of it very quickly. So that's another stock. And SMR is another stock. These are the companies that make small nuclear reactors. There are companies which make nuclear reactors already with earnings in the market. This stock is below somewhere around $20 range when I started looking at it, but it's starting to go up. But they are building their first small modular reactor in Romania, and I already made a video about this stock. So this is something I'm watching. I think it will come closer to the lower band and bounce off. It is still above the 200-day exponential moving average. So I'm still bullish about it. So I'm thinking that as it approaches this diagonal line of support out here, it's likely to bounce up again, and around that time is when I would like to buy it again for speculative purpose, because these are all like our genomic stocks. They're all startups. They don't have revenue, and they'll be burning through capital, and there could be equity dilution. So be careful whether it is Rigetti or SMR. Their financial situation is likely to be precarious, but the opportunities are there, and it's a very small speculative stake that I have on Rigetti. I don't have anything on SMR right now. I'm now looking at Verve with my 4-hour cup and handle pattern out here, and when I look at this pre-market action of plus 4.65%, I feel heartened. I feel heartened by the fact that we are above this diagonal line of support. Let me take you to the one-day chart. You can see that we had done a cup and handle out here, and we are thinking that we might probably reach a target of 8.53, and since then things have started moving sideways. So I do not know what's going to happen with Verve. I'm not yet sure whether this cup and handle target is valid. Of course, the cup and handle target was not formed over weeks, it was formed over days. So the chances of it succeeding is not that great. And right now the share appears to be on a mend, but I'm not quite sure that we're going to meet the target of 8.51. Quite a few people ask me about Intelia time and again, so I just want to have a quick look at Intelia out here. Intelia is on a bear channel and it's way below the 200-day exponential moving average. So I wouldn't touch Intelia until it crosses above the 200-day exponential moving average and it manages to create new higher highs. There's no rush. The stock is at 12.13, and you have seen the story of other stocks in the genomics world like Caribou Biosciences, which is now to 1.72. If you look at Editas, it is down to 1.34. And then you have the cautionary tale from Ginkgo Bioworks, which went into penny stock, did a reverse split of 1 to 40. That's a huge reverse split. And then, of course, you have the story of Bluebird, which had 3 therapies already in the market, approved by FDA, monetized 3 therapies, expensive therapies, got payers lined up to pay for it, has already started treating patients. But then it became a penny stock and it had to do a reverse split of 1 to 20. So I'll put a word of caution to everybody in the genomics world out here. Be careful about these things. You may want to accumulate them, but if they're in the double digits, just be careful if they don't have any monetized product in hand. That's what I would like to say. The ones that are doing quite well are Unicure. It's continuing to make new highs, and today pre-market it's down minus 0.78. And I want to bring into attention another stock called BioNTech. This is right now on the German market that I'm looking at it. It's BioNTech SE. We have the same stock in NASDAQ. I'm going to do a bit of analysis on that. I think that stock has some upside. This was bought to us by Michael, one of our subscribers from Germany, and his pointers earlier has always been good. So I'm going to investigate BioNTech and maybe look at bringing a video to you. It seems promising right now. It has broken out of a long-term bear channel and is creating new higher highs. And today pre-market it's up 5%. So watch out for that video. And thanks to Michael for bringing this to my attention. Well friends, that kind of brings me to an end of today's video. Remember, this is going to be an action-packed month. It's going to be a shorter month, and we are also going to see the inauguration of Trump on January 20th. We got a day of mourning on January 9th. These are 2 days when the markets will be closed, apart from the weekends. So then we have option expiries on Friday. We have government employment data, JOLTS data coming up, and we have got unemployment numbers, ISM numbers, all those things coming up. All of them are huge catalysts. So there's going to be a lot of volatility out there. There's going to be a lot of excitement out there in the market. So I think that what we will have to do is keep an open mind and play the trend instead of trying to be either bearish or bullish. And I'm in the final stages of deciding my portfolio for 2025. So I have multiple accounts. I want to select 2 of them, one in Canadian, one in US, so that I can use it for 2025 to show to you guys what trades I am doing, how I started the year and how I ended the year. I may make a profit or I may make a loss, but you'll be seeing it all as a real retail investor, and you'll have the opportunity to share your thoughts with me. We can exchange ideas and make sure that all of us do better in the market. If not all of us, at least I want to do better. And I'm going to take the benefit of your comments and feedback and validate them by checking out the data with technical analysis and fundamental analysis, and then make my pick even from among whatever you guys suggest. So with that, my friends, I'd like to bring this video to an end. Thanks and have a great day. Bye for now.